As you keep one eye on oil prices, you should also keep a close watch on Bakken players, which may be offering investors some value. I'm here with Dan Digger, senior energy contributor to The Street. Dan, you say if there's a U.S. player that's poised to do well in this oil market, it's the independents in the Bakken. Why is that?
Well, there's been an interesting kind of differential. Now, oil is priced, it's interesting how it's priced. We have benchmarks, and the ones that you see on TV, and when we talk about an oil price, we talk about one of those benchmarks. The benchmark being a WTI price. That's priced in Cushing, Oklahoma, and only in Cushing, Oklahoma. So there are other places where oil is made, where it's gotten out of the ground, where the prices are somewhat different. In the Bakken, for example, there's been a real discount to what we call our benchmark, WTI, for lots of years, sometimes ranging as much as $12, sometimes as much as $15. So if you were in a marketplace, even when oil was going $85, Bakken players might be getting only $70 for their oil. Now, that has changed. As rig counts have come down, and a lot of sort of the production has started to come offline. It's come offline first in the Bakken. It's really the one of the oldest shale plays that are out there, even though it's only about 7 years old. So a little bit of that production decline in the Bakken has led to a tightening, what we call a tightening of basis differentials. It just means that the discount from Bakken oil to WTI is getting less, which means in essence that some of these Bakken players are receiving more for their oil than they normally do. All
right, so which names look best to you?
Yeah, there are some dedicated players who have been in the Bakken for a very, very long time. Continental Resources is one for sure. Whiting is another, but the one that I particularly like to center on is Hess. Hess has been in the Bakken, one of the earliest players in the Bakken, very key acreage there. They've taken it on the chin over the course in stock price over the course of the last several months because they've sort of become a non-integrated player. They've sort of sold off a lot of their other aspects of their oil industry, and they've sort of concentrated very much on shale play, particularly in the Bakken. And now may be a time when things are starting to change for the better for Hess. Before it seemed like things were going badly. Every time they set something out, for example, when they sold all their refining assets and their gas stations, it seemed like that's when refining and gas stations did really well. So they've kind of come up against some bad circumstances, but they've been to concentrate on shale oil. But now maybe there may be a couple of things that are finally going in that direction.
But we are having a lot of people out there saying that we could see another decline in oil prices. So how do you approach these names with that in mind, or that possibility in mind?
Yeah, and I've been one of those who felt that there was a likelihood of what I'd call a double dip in oil prices. But it's amazing the strength that I've seen and continue to see in oil prices. It seems like when we get down to about $57, that seems to be like a Maginot line. Oil prices don't want to get below that. But similarly, when we get around $62, you know, that seems to be kind of an upper limit. At those numbers, with the differentials that the oil companies are receiving in the Bakken, they do just fine. And with Hess, for example, around $70 a share, it's time, I think, towards a 52-week low. I mean, the 52-week low was in the mid-60s, where it's a pretty good value here.
Great, like to hear it. Thank you so much. The Street Senior Energy Contributor, Dan Digger. And I'm Brittany Humar for The Street.